All right, diving in today, getting into pretty fascinating stuff about where the economy might be going and, the whole Bitcoin angle.
Yeah.
You sent over some really interesting material transcripts of Mark Yusko from Morgan Creek Capital Management,
Yeah, he's always got good stuff.
and also this analysis from Eurodollar University.
Oh, yeah, those guys are great.
So,
Really interesting, different perspectives.
yeah, our goal here is to kind of pull out the key insights for everyone about a possible recession, how the Fed might react to that.
Right.
Questions about, is our whole financial system even stable?
Yeah.
And then, of course, where does Bitcoin fit into all of this?
Yeah, big question.
So let's dive in.
All right.
What jumps out to me right away is that these two sources, they have like different main concerns.
Yeah,
But then they kind of arrive at this really interesting intersection with Bitcoin.
for sure. For sure. Yusko, he's focused on this pretty significant drop in GDP. I mean, it's like a huge red flag signaling a potential recession,
Yeah.
And then from there, his argument really revolves around how the traditional responses to a recession, like lowering interest rates and printing more money.
Right, the classic playbook.
Exactly, how that's all going to impact Bitcoin.
Yeah, and Yusko's basically saying that if the Fed tries to stimulate the economy by just pumping out more dollars,
Right.
that could devalue the dollar, right?
Yeah.
And since there's only ever going to be 21 million Bitcoin,
Fixed supply.
its price in those now less valuable dollars would probably go up.
Makes sense.
It's almost like, think about monopoly, right? If everyone suddenly gets like a ton more monopoly money,
Uh-huh.
the price of that, that rare boardwalk property card,
Oh, yeah.
that's going to go through the roof.
Totally, totally.
And Yusko, he backs this up with a really interesting historical perspective.
Yeah.
He goes through the lifespan of all these different world reserve currencies, going way back.
It's a fascinating history.
And the roles that central banks and, this increasing debt have played over and over again.
Yeah, patterns repeat. Right.
And he points out that since the Fed was created, like over 100 years ago,
1913.
the dollar, it's just been steadily losing its purchasing power.
Inflation, the silent thief.
Right, exactly. He calls it like a silent wealth tax.
Yeah.
And he gives this great example of how his on-house price went up.
Mm-hmm.
Not because the house itself got any better,
Right.
but just because the dollars used to buy it are worth less now.
Yeah. That's inflation in a nutshell.
And Bitcoin, with its limited supply,
Yeah.
it's just a totally different model.
Fundamentally. Yeah.
Now, this leads into Yusko's investment strategy,
Okay.
which I thought was really interesting.
Yeah, he's got a very clear framework.
He's got these three buckets, right?
Uh-huh.
So first you got liquidity, like cash on hand for immediate needs, 5 to 15%.
Makes sense.
Then he's got the get-rich bucket.
A little bit more risky stuff. Yeah.
For higher risk, higher reward opportunities, 10 to 15%.
Okay.
And then the biggest chunk is the stay rich bucket.
Long term, the core.
Yeah, for long-term wealth preservation, that's the 70%.
Mhm.
And for people under 65, he says Bitcoin belongs in that stay rich bucket.
Interesting.
Now, this is where I was like,
Yeah.
Bitcoin, stay rich. Because we all know how much Bitcoin's price jumps around, right?
Yeah,
It's super volatile.
Yeah, it's not for the faint of heart, that's for sure.
So how does that fit into a long-term wealth preservation strategy?
Yeah, that's a crucial question. And Yusko acknowledges the volatility up front.
Yeah.
But he emphasizes the historical average returns of Bitcoin,
Yeah.
even going so far as to compare it favorably to, companies like Amazon in the early days.
Oh, well, okay.
But more importantly, he highlights Bitcoin's extremely low correlation to traditional assets like bonds and stocks.
So basically what you're saying is, even if the stock market crashes,
Mm-hmm.
Bitcoin might not follow, and it could actually kind of act as a buffer in a diversified portfolio.
That's the idea, yeah. He brings up these near zero and very low correlation figures, suggesting that adding Bitcoin can potentially reduce your overall portfolio risk.
Interesting.
It's kind of like adding a shock absorber to a car, right?
Yeah.
The shock absorber by itself, it might feel kind of bumpy,
Yeah.
but it smooths out the whole ride, right? It makes the overall journey much more stable.
Okay. I like that analogy. That's a good one.
Yeah, it helps to visualize it.
So let's switch gears a bit now.
Okay.
Let's talk about this analysis from Eurodollar University.
Yeah.
Their concerns, they seem to be more about the stability of the whole financial system as it is.
Yeah, the system itself, not just one asset.
Especially the market for U.S. Treasury bonds.
Right, the bedrock of the financial system, supposedly.
They brought up this idea of a potential bailout for certain hedge funds.
Yeah, the ones involved in that basis trade, remember?
Remind me, the basis trade, what is that exactly?
Okay, so in simple terms, it's basically trying to profit from these tiny, tiny price differences between different but very similar U.S. Treasury securities. But they use a ton of borrowed money, leverage, to really magnify those tiny differences into bigger profit.
So it's all about amplifying the gains,
That's exactly.
but then, of course, amplifying the risk too, right?
Right, exactly. Two sides of the same coin.
Got it.
And they often finance this through these short-term lending markets called the repo market.
Repo market, okay.
Yeah, it's a whole nother can of worms.
We might have to do a whole deep dive just on the repo market.
Oh, absolutely.
But so what's the big worry?
It's not necessarily the basis trade itself that's the problem,
Okay.
but what it might indicate about the underlying pressures building up in the whole financial system.
Like a canary in the coal mine.
Exactly, a warning sign.
Okay.
And Eurodollar University, they connect this to past crises too.
Yeah, they specifically mentioned 2020
Yeah.
and 2000.
Big ones, right?
Those were big ones.
During those times, something really interesting happened.
Yeah.
Instead of seeing the typical flight to safety where everyone rushes to buy U.S. treasuries, treasury yields actually went up.
Which means their prices went down.
Exactly.
That's the opposite of what you'd expect, right?
Yeah, it's counterintuitive.
So what's Eurodollar University's take on that?
They argued that it wasn't because people were suddenly losing faith in U.S. debt, but rather it was potentially because of dollar shortages.
Dollar shortages, huh?
Yeah, so foreign central banks and others who really needed dollars,
Yeah.
they were actually forced to sell their treasury holdings to get those dollars,
Oh, I see.
creating like a glut of supply in the treasury market and pushing prices down.
Okay, so almost like a fire sale.
Yeah, exactly.
To get the dollars they desperately needed.
Yeah, and this whole idea of dollar shortages, it's a recurring theme in their analysis.
So this bailout that's being proposed, they see it less as a solution to a hedge fund problem
Right.
and more as a sign of this, like, potential instability within the dollar system itself.
Yeah, it's like putting a small bandage on a much deeper wound.
Yeah, that's a good way to put it.
The underlying problem isn't being addressed.
Yeah.
And then they turn their attention to companies like MicroStrategy, now Strategy,
Right, they changed their name, yeah.
and their massive Bitcoin holdings that they financed with all that debt.
Yeah, Michael Saylor, the CEO.
He went all in on Bitcoin,
He did, you really did.
using borrowed money to buy a whole lot of it through convertible bonds and more recently even preferred stock with pretty high dividend rates.
Wow, okay.
And that's where Eurodollar University starts to raise some concerns.
What are they worried about?
It all comes back to leverage, that borrowed money.
Yeah.
If Bitcoin's price were to drop significantly,
Right.
Strategy might be forced to sell some of their Bitcoin
Yeah.
to cover those interest payments and debt obligations.
Oh, I see.
And that could create a pretty nasty downward spiral.
Yeah, like they're walking a tightrope.
Exactly. If Bitcoin's price keeps going up, everything's fine.
Yeah.
But if it takes a tumble, things could unravel pretty quickly.
Okay, so high risk, high reward.
Yep, that's the nature of leverage.
And this leads into their discussion of Michael Saylor's big push for the U.S. government to adopt Bitcoin as a reserve asset.
Which is pretty interesting considering Bitcoin's original ethos, right? Decentralization and all that.
Yeah, it seems kind of contradictory.
Yeah, bit of a head scratcher.
In Eurodollar University, their big question is, does it even make sense for a government to borrow dollars?
Which they can just print more of anyway.
Yeah, exactly.
To buy Bitcoin and hope its price goes up.
Right, it's kind of circular, isn't it?
Yeah, they argue that a currency's real value, its fundamental value, comes from its use as a medium of exchange.
Meaning people actually using it to buy and sell things in the real world.
Right, day-to-day transactions.
Not just its potential as a store of value.
Exactly. It has to be useful for something beyond just hoping it goes up in price.
And they bring up the example of El Salvador.
Yeah, remember, they made Bitcoin legal tender.
Big experiment.
Huge experiment. And it hasn't really led to widespread commercial adoption.
Really.
People just aren't using it that much for everyday purchases.
So it's more of like a digital gold kind of situation.
That seems that way, yeah.
Okay, so just focusing on price appreciation might be a pretty limited way of looking at what makes a successful currency.
That's their point, yeah.
It's like trying to make a wrench more valuable by just increasing its price tag,
Yeah.
even if nobody's actually using it to fix anything.
Exactly. It's got to have utility.
Right, it's got to be useful for something.
Yeah, that real-world use case is crucial.
So let's bring it all together now for everyone listening.
Yeah.
We've got these two perspectives. Mark Yusko, he's pretty bullish on Bitcoin.
Yeah. Sees it as a safe haven asset.
Yeah, he sees it as a potential refuge from the storms brewing in the traditional economy and from all this inflation we're seeing.
And those storms might be pretty big.
Yeah, and he thinks it's a valuable asset to hold for the long term.
Long-term play, yeah.
Then we have Eurodollar University.
They're a bit more cautious.
Yeah, they're more concerned about the underlying stability of the whole financial system.
Yeah, the cracks in the foundation.
And they question whether Bitcoin, with all the speculation and the debt-fueled buying,
Yeah, that leverage is a big concern.
whether it's really on track to becoming a widely used everyday currency.
A true medium of exchange.
Exactly. So it's a really interesting contrast.
Highlights the uncertainty of the times we're living in.
Yeah, Yusko's optimistic about Bitcoin's role in this potentially shaky traditional financial world,
Right.
while Eurodollar University is suggesting that the shakiness itself might be a bigger problem than we realize,
A bigger problem that needs addressing.
and that Bitcoin's current path has its own set of risks.
Yeah, it's not a guaranteed win.
Definitely not a guaranteed win.
The example of Strategy's leveraged bet on Bitcoin really drives that point home.
Yeah, it's a high-stakes game for sure.
High stakes, high reward, high risk.
So understanding both of these viewpoints, the optimistic and the cautious, I think it gives you a much more balanced perspective.
Yeah, you gotta see both sides.
It helps you think critically about all these different forces that are shaping the future.
Exactly. Don't just take one narrative at face value.
Right. Do your own research, look at it from all angles.
Think for yourself.
Exactly. And what stood out to you the most in this discussion? What questions are you left with about the future of finance, the future of digital assets?
There's so much to unpack, so much to think about.
Yeah, it's a fascinating time to be alive, that's for sure.
Absolutely.
So we hope this deep dive has been helpful.
Yeah, hopefully a good starting point for further exploration.
Yeah, a good shortcut to navigating all these complex ideas.
Keep learning, keep asking questions.
Absolutely. And with that, remember to follow, like, and share this deep dive. And follow What Bitcoin Taught Me on Twitter, X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn.
Yeah, all the places.
We're everywhere.
Find us, join the conversation.
All right, thanks for joining us for this deep dive.
Yeah, always a pleasure.
We'll catch you next time.
See